Economics is the study of scarcity.
Economists study how societies use limited resources and how people make decisions. In this video, we're talking about how money works and the impact that the economy has on real estate and the stock market.
What's up, Legacy Builders? I'm Rob.
I'm Reshawn. And this is Learn, Hustle, Grow.
She's a stock trader.
He's a realtor.
And we are debt-free investors. If you've been following our journey, then you know that at the end of 2018, we left our W-2 jobs, and in 2019, we traveled the world.
We focused on debt paydown and long-term investing to achieve financial independence. On this channel, we're sharing our version of life after corporate America.
Since leaving our jobs, we have more time to watch the markets and continue to learn.
Can't wait to hear more? This is a great time to smash that like button and subscribe.
The Federal Reserve is the central bank of the U.S.
It's their job to create monetary policy and to maintain financial stability.
This is why investors and the financial media are on pins and needles every time the Fed has a meeting.
These are the folks who decide whether or not interest rates should be raised.
2020 was a rough year all around the globe. When the economy's doing bad, then interest rates are kept low.
Low interest rates stimulate the economy by giving Americans more buying power.
This is especially true when it comes to big purchases like cars and houses.
I mean, let's be honest. Most of us aren't buying a house or a car in cash.
No.
That means we need a loan. And it doesn't take a genius to understand that you would prefer a loan with a 3% interest rate versus 6%.
Economists have been reporting for months that the U.S. economy is in recovery.
At the same time, there are fears of an economic crash. How is that even possible? One word: inflation.
As of September 2021, the inflation rate is 5.4%. This is higher than the Fed anticipated.
Before the pandemic, the rate of inflation had been maintained at lower than 3% for about a 10-year period. The inflation rate in 2020 was about 1.5%. So the year-over-year record high is the result of a significant low.
In addition to setting the interest rates, the Fed also gets to decide how many bills are printed per year.
Ooh, that's power.
It's money.
When the pandemic hit, it actually caused the stock market to plummet, businesses to close, and record unemployment. So the U.S. government had to step in with stimulus packages.
With prices on the rise, it's hard to believe that was less than 2 years ago. Some economists believe that there's too much money in circulation right now.
More money equals more stuff. When demand is high, prices increase. That is just the simple law of supply and demand.
When the Feds decided to keep rates low, they knew that there was a possibility that inflation would happen.
Remember, inflation isn't always a bad thing.
Right.
During times of higher inflation, companies are forced to pay their employees and workers more money. That's something that's been long overdue.
In the current market, employees have major leverage. We see this playing out all over the U.S. with all the strikes and everything.
Jerome Powell is the chairman of the Federal Reserve Board. He seems like a really smart guy. I mean, he's a graduate from Princeton University. He also has a law degree from Georgetown. Before taking this job, he was a lawyer and an investment banker in New York City.
'Cause I'm from New York City, goddammit.
Sounds rich to me. Oh, wait, he is. This is getting interesting. Hey, if you want to hear more about this, make sure you hit that like and subscribe button, though.
Not that it matters, but his net worth has been estimated to be somewhere in the area of $50 million. The real point here is that he has legitimate credentials. So why are some economists sounding the alarm?
I'll tell you why. Because Jerome and his crew said that inflation will be temporary.
Well, what he had said was that it would be transitory, and that means not permanent.
Okay.
I guess that's the same as temporary.
I guess. Throughout 2021, we've seen prices rise on everything from gas to groceries to cars to homes.
The impact is obviously worse than anticipated because Americans on Social Security are getting a cost of living increase of 5.9%.
Wow.
Effective December of this year.
To put things in perspective, the 2019 cost of living adjustment was 1.6%, and in 2020 it was 1.3%.
The Fed believes that this is all being driven by the massive supply chain issues that have been caused by the COVID-19 pandemic.
Before the pandemic, most businesses had standing orders with their distributors or suppliers.
Once the global economy was shut down, businesses began to cancel their orders. Nobody knew how long the shutdown would last. They needed to preserve their capital. Now, manufacturers are playing catch up.
We live in a global economy. That means that our economy is entangled with the economy of other countries.
According to public data, some of our biggest imports include, but not limited to, cars, computer chips, medical equipment, planes, even appliances.
You name it. The media is reporting that almost 500,000 shipping containers are stuck at ports off the coast of California alone.
This is not normal.
No.
So Jerome is saying that once we get all these shipments where they belong and these products and goods in stores, we'll start to remove the bottleneck in the supply chain and then prices will become more normal.
Hope you're right, Jerome. How does all this impact the stock market and real estate?
Well, like people, corporations are fans of low interest rates, but they hate inflation.
Low interest rates reduce the cost of corporate borrowing.
Remember, high inflation leads to higher wages for employees. Wages and benefits are at the top when it comes to corporate expenses.
Profits equals revenue minus costs. Higher costs equals less profit.
When companies report lower profits and slower growth, stock prices go down. Look, these corporations have already refinanced their loans. They're saying enough is enough.
Historically, the stock market performs better when the economy is doing poorly. Last year was a prime example of that.
Inflation is high and the U.S. economy is in recovery. Many of the stocks returned to their 52-week low in Q3 of this year.
Jerome and the Federal Reserve Board plan on keeping the interest rates low until 2022.
Let's talk more about how this impacts the real estate market.
I'll start with the bad news. First of all, the house prices have been out of control for the first half of the year in DFW. With that comes higher rents.
Well, we saw homes in this market sell for $25 to $50K above asking. On top of that, they received something like 30 offers and were gone in less than a week. So, what's the good news?
The good news is that the housing market seems to be stabilizing. Things seem to be cooling off around the country. So,
you know what everybody wants to know.
what's that?
Are we going to see home prices come down?
I'll get to that. We're seeing houses stay on the market a little bit longer, and instead of 30 offers, it's been floating slightly less than 10.
So does that mean this is a buyer's market?
No. Due to the lack of inventory, it's still a seller's market, but it's less competition.
Could that be due to the fact that we're approaching the holiday season?
There are definitely more buyers in summer months, and most people don't want to move during the holidays. So, but people might have to leave for whatever reason, no matter what time of year it is. So,
Okay, so it sounds like what you're saying is the winter months might be a good time to buy.
the data seems to point to that. According to one analysis, showings fell 10.7% year over year in August.
Wow. So have you seen any other indicators that might lead us to believe that the winter months would be a good time to buy?
Yes, Zillow has said that they are done buying for the rest of 2021.
What? Why? They have really been on a run.
Indeed. Due to a shortage of supplies and labor, Zillow can't meet demand, renovate, and sell those things fast enough.
Wow. That is huge. I don't think that people realize just how significant that is.
Yeah. Zillow purchased over 3,800 homes in the second quarter, making it a record high, and that is twice as many as they purchased in quarter one.
Wow. Okay, that is all good to know. But back to my previous question. Does that mean home prices are going to start to come down?
No. This is the new normal, but with less competition, we should see the housing prices level out.
There you have it. That's how money works. So what can you do in the midst of all this economic turmoil? Two things. One, take advantage of the low interest rates while they are available. Two, Negotiate for higher wages or better employment. You have leverage.
Have you done either of these? Drop a comment below.
Rob Lee is a licensed Texas realtor specializing in the DFW market. In addition to representing sellers, he helps buyers and investors navigate the process. You'll find his contact information in the description.
See you in the next video.